It's no secret that car shoppers could use a little less time hassling and a little more time behind the wheel. This company wants you to skip the dealership and make the car buying process run like a well-oiled machine. Is there a traffic jam ahead? Or will this big idea be nirvana for investors?
Oh, with that opening, we've got to ask ourselves, what do we do with Carvana? I mean, some stocks just don't know when to quit, and this is one of them. The web-based used car dealership that's shaking up the entire industry. Regular viewers know I'm a big fan of used cars for years because consumers want bargains, and these days, cars last longer than ever. The whole complex has been doing well, but Carvana is something else entirely. Here's a company that's trying to revolutionize the way we buy vehicles. No dealerships, no strong-arm sales tactics. Just go on the website, then pick up your car from one of the giant vending machine-style garages, or just have it delivered straight to your house. Now, there are a lot of skeptics here. People fretting about how quickly Carvana's burning through its cash, how much debt it's taken on. These are all legitimate worries, but every time I've listened to bears, the stock is powered higher. Anyway, and it's no wonder why Carvana's sales more than doubled in the first half of the year. And the stock's up more than 150% for 2019, including a major move after the company reported some really incredible numbers last month. Can it keep climbing? Let's take a closer look. First time with Ernie Garcia III, Chairman and CEO of Carvana. Learn more about his company and its prospects. Mr. Garcia, welcome to Mad Money.
Thank you.
Good to see you, Ernie. Have a seat.
Great to be here. Appreciate it.
Well, first, as I say to people who are on first time, I want you to walk through what you do, because it is indeed revolutionary and it is indeed disrupting one of the largest markets on earth.
Sure. So we sell cars online. Our mission is to change the way people buy cars. So customers come to our website. We have about 18 to 20,000 cars in inventory. They can search through all those cars. They can, get approved for and select financing. They can get a trade-in value for their car. They sign contracts online. We then deliver the car to their door as soon as the next day. They get a 7-day return policy, and by doing it all a different way, we're able to save them a very significant amount of money in the process.
Well, this is actually the opposite of pretty much everything that's currently done, isn't it?
It is, yeah.
I mean, but from the return to the idea that it can come to your house, to the number of cars you have, isn't that quite different from a typical dealer?
So something I think is great about our business model is because we have a national inventory that's available to customers everywhere, all the cars anywhere in the country can be bought and brought to a customer's door. So that gives them a lot more selection than they normally get at a dealership where there's maybe 100 to 200 cars in the lot.
So people who question your model say it's too good to be true, that there's no way you'll ever make money because at this pace, it's too good a deal for the consumer, which I always like. What do you say to people say that in the end, you really can't get profitable? And also the trajectory of what you were losing and what you're not.
Yeah, well, so we're growing very fast, right? So I'd start with that. Last quarter, we grew by 95% in units. We grew by 108% in revenue. We grew by 134% in customers interacted with, 188% in cars we bought from customers. So that does require some investment. That said, despite all that growth, over the last 3 years, we've gone from losing about 23 cents on every dollar of revenue to 3 cents last quarter. That's a big move in just 3 years. And we did that while, increasing the size of the company roughly tenfold. So,
okay, so let's say tomorrow you wanted to be profitable. You could be, I think, judging by that trajectory, but is that really the goal of a disruptor?
So, here's an interesting stat. So last quarter, we were about 40 basis points in this market. So for every 1,000 cars sold in the U.S., we were approximately 4. I think when you're that small relative to this opportunity, it's $1 trillion opportunity. I think it's hard to say that now's the time to take your foot off the gas. And so, we're definitely accelerating into this opportunity because it is so big. But despite all that acceleration and all that investment and growth, we're still making a ton of progress financially.
We've talked with you about your company because we're very fond of it, and the vending machine model. I think that's very exciting. We've got some graphics that shows what it means, but walk us through that and how that's doing.
Yeah, well, so I think the vending machine is really interesting. I think a view that I have is one of the ways the world's changed over the last 10 or 15 years is customers are able to communicate more with other customers out there more easily through social media and other channels. And so I think it's important now in this world to build your marketing dollars into the experience you give customers, because then they're going to talk about it with their friends. They're going to drive by it on the street and say, what is that? And then you give them an excellent experience, and that serves as marketing dollars as well, which is just more efficient overall. So the vending machine serves that purpose.
Okay, where you have them, Atlanta, it does incredibly well.
Yes, yeah, so we've got 20 vending machines now. We've got about 140 markets overall. So we don't have vending machines in every market, but we're working on that.
Now, you mentioned cars you buy from people. That's also integral to your business model.
It is. So an interesting thing about buying cars from customers, or I guess the car buying market in general, is that really all used car transactions are just trades between people. It just goes through this elaborate mechanism of a customer goes to one dealership, and then that dealer goes and sells it at auction to another dealer, and then that dealer sells it to a customer. And so if we can collapse all that, buy from a customer and sell directly to a customer, there's a lot of savings in that we can share with our customers.
Same time, the auction houses do seem to like you.
They do. Well, we're a big participant in that market. We're one of the fastest, or we are the fastest growing automotive retailer out there. So we've got great relationships with them as well.
Some people say, well, listen, they'll never have enough money to be able to get profitable. It'll take too long, and in the interim, they got to keep raising capital. I saw you did a capital raise before. I'm certainly hopeful that you're not going to do one after the show.
Well, so we ended last quarter with a little less than $850 million in liquidity resources. We had an EBITDA dollar loss about $32 million last quarter, so that's pretty small compared to the capital resource that we've got. And so we feel really good about our capital position.
If the Fed were to cut rates dramatically, you'd make even more money, wouldn't you?
You know what? I think the direct impact would likely be that because we do have a finance operation associated with
right, and I think it's a good one.
It is. It's a great part of the business. It makes customer experiences simpler because they can get approved for and select financing in seconds, and we don't have to check with any third parties. That's our credit scoring engine, our pricing engines. All of that goes into driving what they're able to do, and then they can just click a button and get finance right there.
All right, now, Ernie, a lot of people watching the show and they're thinking, why didn't I think of this? And what can I do to think like Ernie Garcia? I need you to go back in time. What made you think you could do it? It really kind of disrupted the industry, by the way, that AutoNation and CarMax thought they'd already disrupted.
I suppose it's I'm a curious person, and so you always try to think through what you can do. I was probably too vain, too, believing that we could make a change. But had a bunch of friends that were willing to take that leap with me and be just as vain as I was.
Oh, a bunch of friends who were working with you or lent you money? What did they do? Again, keep in mind there are people who are watching. You're saying, I want to be Ernie Garcia.
Well, you should reach higher to all those people out there. But yeah, so I've got several really close friends that I was lucky enough to start the company with, and then we've hired thousands of people since that have brought the same passion to it that we've brought to it, and I think we've been extremely lucky to have the success that we've had so far.
Well, I'm glad you said luck because it does play a role, but I can tell you it's also skill and hard work because you've got that going for you. That's Ernie Garcia, Chairman CEO of Carvana, a fascinating company. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.